Assalamu alaikum, everyone. I hope you are doing well. Today is Monday, February 10th, and we had a positive day in the market. The major indices were all up, with the Nasdaq up the most, 1.23%. The dollar index was up a smidge, the VIX was down, and the yield on the 10-year Treasury was up 0.18%. Tesla continued to create an ever more attractive opportunity for investors. Now at 350, it was near. We were talking about 500 not too long ago, but I do believe that we will get back up there. And what we're seeing right now is an opportunity. We'll talk about how the competition is heating up in the EV space in a second. Nvidia rebounded to 133, continues to rebound. So, congrats to those who bought at the bottom after the DeepSeek panic that engulfed the market about 2 weeks ago. Other names, Bitdeer was up close to 5% today. Iris Energy reports earnings on Wednesday. It was up 3.13% today. Palantir continues to go up. It's now at 117. I absolutely believe that a lot of shorts have something to do with this. I've gone over this before. I don't think the valuation for Palantir makes much sense. Assalamu alaikum, Rashad. Nice to see you. Newly anointed moderator. Salam Khalid. Nice to see you from the gym. Hamid, nice to see you. Salam to everyone tuning in. If you enjoyed these lives, do leave a like. And if you're not part of our community, make sure you become part of our community. There's a lot of value there. Gold continues to reach ever higher highs. It's now at 2,900, and who knows, maybe we get 3,000 not too long from now. BTC is still below 100,000 and 97,000. Doge is at 25 cents. It's been lingering at this level for a while. Let's hope it can hold this support. And Solana is at 200 even. All right, so in terms of the details for the competition that is heating up in the EV space, BYD's most affordable EVs just got a smart driving upgrade for free. Now, it's unclear to me, smart driving, how close that is to full self-driving, which is what we like to talk about when we're talking about projections for Tesla's EV business, and specifically the margins that it can potentially get from its EV business if it starts with full self-driving and builds off of that into a robotaxi network and passenger delivery services that have very high margins. So if I had to bet, and I do believe that there will be other car companies with their own versions of full self-driving. I think that's inevitable. But if I had to bet and pick, which car company is the most likely to do this effectively against Tesla, it would have to be BYD. And I do think that basically most of the car companies of the future will be Chinese. Now, you could argue that Tesla is already somewhat Chinese, considering its large presence in China. But most of them will be Chinese, with exception to Tesla. I believe that Tesla will be one of the very few car companies that is able to compete effectively without tariffs with Chinese cars, and certainly I think the full self-driving that Tesla has is more advanced, unless I see otherwise from BYD. This smart driving upgrade and what it's calling God Eye, no one knows actually. Well, I should say I don't think there's enough consumer feedback about exactly how they compare with Tesla as of yet. We'll get a lot of more information about the advancement of their system in the coming days and weeks, I'm sure. BYD's EVs got the free smart driving upgrade, as we said. Its vehicle intelligence event, at its vehicle intelligence event, BYD launched 21 of its top selling models, which now include its God Eye smart driving system. So they're not even trying to call it full self-driving or autonomous driving or anything like that. They are setting the bar high when they call it God Eye, but they're calling it a smart driving system. And all cars have smart driving system at this point, but the question is how smart. And there's no extra charge for the new tech, which is pretty good for BYD owners. So we'll see. We'll keep you updated on what we learn about these systems and how sophisticated they are. In other news in the EV world, Rivian opens up commercial van orders, a potentially lucrative business. So Rivian had a deal with Amazon to supply them with 100,000 electric vans. And basically, Amazon is only using 20,000. And Rivian's exclusivity with Amazon is set to end soon. And Rivian is now opening up their van business to other commercial companies. And so this is a potentially lucrative business for Rivian. That being said, Rivian is still unprofitable, still burning cash. And I have to say, just the automotive business generally is a very cutthroat business, very, very slim margins, unless you're pairing them with, software that has a deep and wide moat like full self-driving. I'm not really interested in becoming a business owner of any electric vehicle companies, and therefore Rivian will, until further notice, be a complete pass for me, a very easy pass for me. And if you look, for example, a cash flow statement for Rivian, they're still burning close to $1 billion every quarter. So there's likely to be a lot of dilution, a lot of financing events in the future, and I'm just not going to stick around for that. If you look at a company like BYD, they're the only company that's able to produce EVs. Actually, plug-in hybrids are a big part of their production. So it's not like they're like Tesla in that they're purely EVs. So it's kind of comparing apples to oranges when you compare the two companies. But and so it's understandable that with plug-in hybrids, you're going to have a higher margin because a lot of it is a business that everyone's already familiar with, and you don't have to have with a plug-in hybrid. There's no specification for how big the battery needs to be. So long as there's any type of battery, regardless of size, if you're plugging it in, it's a plug-in hybrid. And therefore, how close they are to full EVs will differ between different model cars. And therefore, you really can't compare the margins for BYD as a whole with Tesla as a whole. Not only that, there's other lines of business both companies have, which makes the comparison a lot tougher. But in terms of operating margin, to their credit, the BYD company does have a 7.8% operating margin. Now, I would still consider that a tough business to be in, 7.8%. When you're looking at gross margins, you're talking about 21%. So, just top line revenue minus cost of goods sold, 21%. That's not a lot of room to operate in. So this is, just another example of why I really don't like investing in car businesses unless there's a robust argument for moats related to proprietary technology that they have. And the expectation for investors in something like Tesla is that with time, these margins are going to grow a lot from the purely manufacturing margins that they currently boast, and they're going to look a lot more like software margins in the future. All right, so going back to Tesla and where Tesla stands, as we mentioned today, Tesla was at 350. And in terms of where Tesla stands for price targets, I personally think it's very likely that we see something on the order of 700 per share for Tesla in the next 12 months. I think that especially if we get the announcements actually materialize. So we have the hatchback for Tesla first half of 2025. We have the Model Y, the new version coming out. That should help with sales a bit. I'm sure a lot of people were holding off on buying last year in anticipation of this refresh. Then we have in June the rollout of the full self-driving robotaxi, I believe in Austin, Texas. And then we have hopefully some Optimus robots rolling off the assembly line probably in Q4 of this year. So if these milestones are hit and relatively go smoothly, I think we could see a $700, a 7 handle, let's say, for the stock by the end of the year. Now, in terms of other analysts, what they're talking about, so Tesla price versus the targets, we can see here the analysts that are covering and where they stand with regards to Tesla. So in terms of bullish, for example, 7, somewhat bullish, 11, indifferent, 11, somewhat bearish, 1, bearish, 6. So there's definitely a skew towards the bullish amongst analysts covering Tesla. The average, so in the assessment of 12 months price targets, analysts unveil insights for Tesla, presenting an average target of 362, which is above where we are right now, a high estimate of 550, a low estimate of $24. I'm pretty sure you can just throw away that $24 estimate. It's probably taking the average down. This upward trend is apparent, with the current average reflecting a 20% increase from previous average price target, $299. All right, so in other news, we've stopped in sort of a sign of the times and the cutting back on expenses that we're trying to do. We've stopped printing pennies. So we're cutting costs wherever we can find them. I'm sure this is not going to do anything to the 35 trillion in debt that the United States is in, but I guess every penny counts, pun intended. So what the end of the penny means for the economy. So basically we stopped printing pennies. It was costing us 2 pennies to print 1 penny. So I believe that's the definition of waste, and I don't think anyone's using pennies anymore. So it makes sense to cut it. But just a sign of the times and how inflation has impacted our currency. All right, so other news, steel and aluminum stocks had a nice surge. Sure, investors were pleased because Trump plans to impose 25% tariffs on imports to the United States. 80% of the United States steel and aluminum comes from overseas, and now it's going to come from the United States, which means that it's going to be more expensive. Like I said, I really don't believe in 25 in any percentage of tariffs, 25 or above, unless we're talking about, something like medicine. You want to manufacture that in-house. Other vital things, you want to manufacture those things in-house. But in terms of things that are used primarily for commercial application, obviously, if you have weapon systems, you don't want to be importing them. That makes sense. So, yeah, regardless of economics, always make sure that those are done in-house. But as a policy for our country, putting tariffs on things that are mostly used for commercial purposes is not really going to help anyone and not really accomplish much. It's just going to create inefficiencies that could have otherwise been avoided. But that's what Trump's doing, and the steel and aluminum stocks like it. Who knows? Perhaps we get tariffs on lithium 50% of America's lithium comes from overseas. That would definitely favor lithium production companies that are onshore. For example, Piedmont Lithium. So we'll see if that happens. Elon Musk and pals launch massive bid to take over OpenAI. So, in case you think Elon Musk is, too preoccupied with the Department of Government Efficiency or something else on his plate, he manages to get into a lot of different things at the same time. So, Elon Musk and pals launch massive bid to take over OpenAI. I don't think they're going to take it over, but they're trying to get, I guess, a controlling stake. I say that because it's saying here that a group of investors put in an unsolicited, it's funny, unsolicited, 97.4 billion bid on the nonprofit that runs OpenAI, the latest iteration of an ongoing beef between Musk and the artificial intelligence company's CEO, Sam Altman. I have to say, of the two, I trust Musk more than I trust Altman. I don't trust Altman at all. Altman responded by saying, "No, thank you, but we will buy Twitter for 9.74 billion if you want." So nice to see beef happening with those types of numbers. I don't know what's going to happen. I know that OpenAI was trying to raise money last week at a valuation, I believe, north of 300 billion. But it is noteworthy that the group that Elon Musk brought together seem to have some pretty deep pockets. They mentioned if Sam Altman and the present OpenAI Inc. board of directors are intent on becoming a fully for-profit corporation, it is vital that the charity be fairly compensated for what its leadership is taking away from it. Control over the most transformative technology of our time. And Musk's attorney said they are willing to match or go higher than any other bids. And so more to come on that story, I am sure. So with that, let's take some questions. Salam Zuhair, nice to see you. Salam Olagbek. Salam Dr. Khan, nice to see you. Mr. Roblox is asking about put options. I do believe that probably if you're, holding, let's say 100, now contracts are 100 shares each, and puts are basically insurance against, when you're holding the stock, it's insurance against the stock falling in price. And therefore, if you know that you need the money for whatever reason, you can't afford the stock to go below a certain level, and you don't really want to sell, you could buy puts. Let's say the stock is trading at 150, you can't really afford it going below 100. You could buy puts at 100, and basically that gives you the right to sell your shares at 100 even if the shares go below 100. That seems to me fundamentally fine from a moral perspective, and some investors may choose to do so. So I've gone back and forth about this a lot in my mind. I think fundamentally, when you're dealing with fundamentally the ethos of business in Islam, of halal business in Islam, is that you want to sell something that you hope the buyer gets value from. And certainly you don't want to sell something that if the buyer gets value from it, that means that this is going to impact you negatively. And so, if you're selling an option and you're hoping that it expires worthless for the buyer, then I think there's an issue with that from a Sharia compliance perspective. On the other hand, if you're talking about puts and you're, going back to our example, stocks trading at 150, you don't want it to trade less than 100. It's actually going to cause financial, hardship for you. And you don't mind buying an insurance policy, basically in the form of a put option to protect you from that possibility. That seems fundamentally okay, because you're okay if it expires worthless. If it expires worthless, that means that the risk didn't materialize, and therefore what you were worried about didn't materialize, like auto insurance or any other type of insurance. So you're actually happy that you didn't have to use it. If that's the case, then I think that that's fine to buy a put in that case. So I hope that makes sense. So, fundamentally, you have to ask yourself, am I selling something that I hope the buyer doesn't get value from? If that's the case, then I would say that's not Sharia compliant. It's a very very easy rule of thumb to use. I encourage people to use it. All right, thanks, guys. I appreciate your questions. Do leave a like if you enjoyed this live, and become a PIF member so you can follow our trades move for move. Until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.